Our committee, the first thing we did, we discussed a little bit, and one of the first things we wanted to make, even before we put the dots on the board, was to make sure and understand that the corpus of the permanent fund was not going to get impacted by anything we did on the model when we went to work, and we were assured that it did not affect the corpus of the permanent fund. And we went up and put dots on the board, and our top ones were the permanent fund earnings and the permanent fund dividend cap. The next two were income tax and natural gas reserve tax. And when we got done with all of that, we put those in there, and we're still a little short. And then we had more discussion. And again, as it's been stated, Commissioner Hoffbeck and others in the room helped us. But you know, the natural gas reserve tax is borrowing against the future earnings. And after we had it in there, and even though it got us to the $3 billion, we took it out. And we went back to try to find and make some more adjustments. And I can report to you that we made it to green. We made it to $2,997,000,000. And that's as close to green as you're going to get, I think, from our group. It included the endowment at 5%, the permanent fund cap at $1,250. And on that, when you do the endowment and you use the 5% and you do the permanent fund dividend at $1,250, the cap, the projection of the permanent fund dividend for FY17 would be $1,050. It wouldn't get to the $1,250. It would take a number of years to grow it back to the $1,250. But it was a give and take on where you're at. But just so you hear that we tried to get it to the $1,250, and that there is a methodology, but then you have to give and take some others. But our method, I just want to make that clear, that was the case. We did collateralization of the revenues by 20%. And then we started getting into fuel tax. We actually wanted to go higher, but we raised it by 5 cents. It's still the lowest, or some of the lowest in the country. We were going to try to get to 18 cents, which would have raised about $60 million in revenue. But the flow chart at this time let us go up another 5 cents instead of 10 cents. We're currently at 8 cents. And then we added the income tax. We increased the maximum rate of corporate income tax 2%, and the personal income tax as a percent of the federal income tax liability was 15%. And then, like one of the other committees, at least I heard, the state lottery was added, and health care provider tax was added. And I also, our group kept in mind of where our savings account and where it lasted, and it went clear to balance out on this projection, using up the savings over time, got us to 2029. And so that's another thing that you have to watch on those charts to see how fast you use up the current savings that we have that have to cover some of the deficit going out until hopefully where everybody is hoping new revenues come in. As I stated, we didn't want to borrow against the natural gas reserve tax at this point and have to pay it back later. But when those come on, then there won't be any payback, and we can start using those for revenues. And so I hope I covered it. I'm going to be a little shorter. I know some of the others. I just want to thank, the governor's decision to bring us all together, I think, turned us back to the light at the end of the tunnel. I think all his commissioners and all the work they did that's been stated here earlier put working lights up, so we're headed in the right direction, and hopefully it'll stay on track. There's a lot of obstacles that they've pointed out and that you can see in this flow chart when you try to work it. But I think if all of us work together, that's all of the stakeholders, everybody in this state, we can get to the end of the light at the end of the tunnel this time, and there'll be bright days ahead for Alaska. Thank you.